Let's talk about something else that was looming over the market that seems to really have receded. And that, of course, is Evergrande, the big property developer in China that is at risk of default. And the market is watching it in particular today for a couple of reasons. One, there is an offshore bond payment that is due today. We could get some kind of clarity on whether it has made that payment. It's not all of its debt by any means, but it was just a key trigger that the market was watching for. And the second reason, perhaps, is that there's a story in the Wall Street Journal that Chinese authorities are sort of preparing for the worst and preparing local governments, local authorities to prepare for a possible default of Evergrande. What would that mean? Well, could it mean that individuals in China end up losing a lot of money, employees of the company, people who were supposed to take delivery of apartments? There's a lot of repercussions on the ground there. But guys, it seems as though for the global markets, the perception that the worst has passed seems to be being realized here this week. What do you think, Emily?
Well, that's right, Julian. I would add one more thing that I think is adding to optimism here for Evergrande stock in particular as well. And we should note that did close higher by nearly 18% today on the Hong Kong Stock Exchange. And that's after Reuters reported that Evergrande had said that an interest payment on one of its UN-denominated bonds, so that's an onshore bond, had been resolved via negotiations off the clearinghouse. So suggesting here that it has perhaps struck a delay to postpone this payment without having to call this actually a default. I think one of the big questions here, as you were mentioning, Julie, does remain about some of these offshore bond payments, namely that $84 million payment due today. Although should also note on that front that Bloomberg reported that there is an about 30-day grace period here for Evergrande to actually make that payment before it's considered a default. But as we take a look here at Beijing's response, we should also point out that the PBOC injected the equivalent of about $17 billion into the system in cash with the 7 and 14-day repurchase agreements. This is the biggest cash infusion that we've seen into the system since January. So clearly here, China is trying to shore up sentiment. They realize that there could be some ripple effects, at least on their domestic markets and their domestic financial markets, if this Evergrande crisis were to continue to implode here. And of course, the Chinese authorities, as the Wall Street Journal had been reporting, are warning local authorities not to step in here until the last minute, until no other measures of recourse can be achieved. But at the same time here, they're not necessarily saying that they won't step in if it does come to it. And I think that's what a lot of market participants are counting on, is that this is not ultimately going to be a liquidation event, that Beijing will step in here ultimately with a restructure, guys.
Yeah, and you see that really across the board. I mean, you have the futures up right now, guys, and I think the investors have seemingly forgotten everything they were concerned about on Monday when the Dow finished down more than 600 points. Right now, I'm also looking at the Invesco Golden Dragon China ETF, ticker symbol PGJ on the Yahoo Finance platform. And even that, we're seeing a big spike. So a big spike this morning on that Wall Street Journal report. It is starting to outperform the S&P 500 really since late Tuesday afternoon. That outperformance continues. That ETF tracks a lot of the China-focused names, NIO, Alibaba, you name it. But Julie, the market, this starting to feel, and again, you cover enough of these events, you kind of just get a feel for these types of things. One bad headline, you might see those futures go down. You might see markets start to act like they did on Monday because this remains a very disturbing situation, and you have a lot of large asset managers exposed to China stocks, exposed to China debt, other emerging market debt. So if Evergrande fails, I mean, there will be repercussions.
There could be repercussions, yes. I think there's a lot less exposure to China than there was 6 months ago, right? We've seen a lot of people already pull back because of the regulatory crackdowns we've seen on various sectors. And I think what this situation illustrates is that even if the Chinese government is not going to bail out Evergrande itself, even if it lets Evergrande fail, there are measures it's taking. To Emily's point about the liquidity in the system, there are measures it's taking to shore up the broader system. So I definitely think there is some reassurance being felt here today, but certainly there could still be more shoes to drop here.